hBits is a real estate fractional ownership platform, and we're working at the intersection of real estate and technology. Our goal is to democratize access to commercial real estate assets. See, in the past, commercial real estate has been only held by your largest institutions or your very wealthy individuals. And it's been a very, very lucrative asset class, and our goal is to open this up to the everyday investor. Ultimately, while we're playing in India right now, our goal is to create a global market for real estate so that an investor sitting in India can invest in a grade A commercial building in New York.
hBits is one of the most promising and leading fractional ownership platform in the country. We started in 2019. We got our footprints back in Delhi, Bangalore and Bombay, and we have much more plans to open up new branches in the year to come. In terms of our customer base, we got about 10,000 plus registered customers in this time, and we have about 500 plus channel partners working with us, and out of them about 8 to 10 of national partners who are associated with us in terms of our assignments. hBits aspires to actually give a customer a very simplistic experience in terms of ownership. At our website, it's going to be very detailed. Whenever as a customer, you detail the website, go onto the website, you can see the complete asset in terms of the location specification or the asset detailing in terms of the entire financial modeling. The entire thing is available. Obviously, when you log in, you get further details as required in terms of the documentation, etc. of the asset. There's a list of our assets which are listed onto the website. So any customer chooses a particular asset, keeping into consideration the location, the preference. Somebody sitting outside the country wants to take up an asset in Bombay and also an asset back in Delhi.
Commercial real estate in India has been doing very well in the last several years, and it's expected to do well in the future as well. And I'll give a few pointers of why we expect that to be so. India has about 600 million square feet of grade A commercial supply and single-digit vacancies. Now, if you look at it on a per square feet per capita basis, compared to any of the other top cities in the world, whether it's your cities in the US, Europe, or in the East, we have a much lower grade A commercial real estate than any of the other countries in the world or cities in the world. Our single-digit vacancies, now why is that? Well, in the last 5 to 7 years, all the developers plunged into residential development and no one built commercial real estate. So again, there's very little supply of commercial real estate. Another point is that commercial real estate is basically the back office in India, is the back office for the rest of the world. So most of the commercial real estate supply in India, whenever an MNC makes a decision to get commercial real estate in India, they are looking at it in dollar terms. I think 10 years ago, the dollar to rupee conversion was 45 rupees and now it's 70 rupees. So for someone sitting in New York to make the decision to own property in India, there's not really been any change in the price of the property in a dollar sense. Again, that's why commercial real estate is so lucrative for all these MNCs who want to have their back offices in India. In the future, again, even though now it's a very lucrative asset class, there's very little expectation of a lot of new supply to come up. And the reason being is that you need a very strong balance sheet to build commercial real estate. Compared to residential real estate where you can take customer money up front and then build the project, here you need to have a very strong financial ability to build the building, which takes maybe 2-3 years, and then another year or so to lease out the building before generating any money from your tenants. So there are very few developers in India who have the ability to get into commercial real estate. Over and above that, the commercial real estate quality of construction and therefore the amount of money you're spending to build the building is much more compared to residential real estate because of the requirements of the MNCs. Even if you look at the past 7 to 9 months in COVID, you've had the largest fund houses deploying money into commercial real estate in India. Whether it's the new Mindspace REIT or whether it's Blackstone and Brookfield acquiring a large portfolio of Prestige and RMZ properties, there's still a tremendous international investor appetite in commercial real estate in India. I'll just leave with one final point of why commercial real estate is great for the regular investor. if you're investing in a second apartment or a residential flat, you're only going to make 1 to 2% rental yields. While in commercial real estate, you make 8 to 9%. So for a lot of people, fractional ownership might be a new concept, but it's relatively simple, and it's a concept that's taken off in the foreign markets like the US and the UK. So what we're doing is basically, if you think about these grade A glass facade buildings that are present in all the top cities in India, whether it's in Mumbai, whether it's in Bangalore, whether it's in Delhi. Now, generally, these buildings have MNCs who sit out of them and pay monthly rental to the landlord. Generally, these landlords are either your large fund houses or they are very, very wealthy individuals, because to even own one asset, the ticket sizes are 20 crore, 30 crore, and upwards it could be 500 crore or 1000 crore for a whole building. At the same time, these assets are very, very lucrative to own because the assets are already built and there are multinational tenants sitting out of them. So what fractional ownership is doing, or what we're saying is, why can't your everyday investor put in a small check size and own part of that asset? That is essentially what fractional ownership is. And the way we are working on it is it's completely tech-based, so that anyone sitting anywhere can own part of that commercial real estate asset, and it's not restricted to only the very wealthy or the large fund houses.
Fractional ownership is one of the most promising, future-looking and transparent real estate and financial services product in the country. To give you a little basic background, and as we all have heard about this concept in the past, at one point in time while we were a teenager or a millennial, we all heard that in the family there is a good asset which comes on the shelf, which is a profit-making kind of an asset for the family, and some way or the other we don't have enough money to buy the asset. So collectively, as a family, as a professional, as a known acquaintance, we come together and say that, okay, let's buy the asset together, and we will reap in the profits proportionately how much amount of money we are putting into the asset. So this is the basic concept. So we know about the concept, but today in the professional world, we are hearing a lot about it in India and globally, and it's one of the most promising asset classes now. To talk about the fractional ownership concept in the professional arena, today as an investor, we've been investing into mutual funds, life insurance, debt, bond, equity, ETFs, but never have been thought that the retail investor can buy a pre-lease asset which is $1 million, and he does not have to cut a check of $1 million. So that's a concept, that collective ownership is what we're bringing on the shelf. And a pre-lease asset where you have a multinational tenant, you have a grade A building at a prime location, you can be a part of that complete asset by investing whatever money, starting 15 lakh, 20 lakh and above, and you can be a part of the asset and get the rentals of the whole asset proportionately into your account. I think the last 1 year has been quite adventurous and scary for all the investors. The entire year has gone behind thinking of the fact that which asset class to invest so that we can get regular returns. From my perspective, security and realism is the two new synonyms for real estate and financial services in India. So every investor needs to come back to this very important fact that execution risk is not to be afforded in real estate development for sure. One needs to look at that whatever is under construction is a dream, and definitely what is developed and leased out is an asset. That's the new terminology from my perspective. Again, as I said, that execution risk is something which is important, and it should be leased in real estate for sure. Again, going back to residential, definitely it's residential asset ownership is the key prime objective for every human being, an investor and home buyer. Post that, I think we got to be very differentiated and thoughtful in terms of what assets do we invest into. Fractional ownership again has very low, or rather the lowest across all asset classes in terms of the risk, pretty much. So this has to be an essential part of every portfolio diversification. That's important. In terms of liquidity, while the asset is moving, the rentals are coming in, and given the situation like COVID, I think the rentals are coming in. That's one of the prime assets to invest in. So there's high liquidity pretty much into the asset. And a long-term portfolio diversification is very important. You get an asset, you invest the chosen amount, that monthly returns is coming on time by a multinational in an A-grade building. That's definitely long-term. As a company and as a domain, we are data-driven. So somebody sitting back in Dubai, somebody sitting back in California, somebody sitting back in Australia. I think the approach is that how do I validate the right price point? As a company, we have credible players like JLL and associated other players who actually give us a market due diligence report, a peer group report, which actually gives the customer a confidence that yes, this is the asset to invest in, and that's long term. Also, very importantly, looking at the real estate sector, a title report, a legal report is very important to know that whether the asset is rightly placed and the paperwork is right in place or not. That is also a very important thing which the fractional ownership platform brings to the table. And from a long-term perspective, I think this has to be a pull product and a kind of a product which needs to be a part of every portfolio in the country, wherever it's an investment which is done, for sure.
hBits, we're creating a global digital exchange for ownership of real estate and alternative assets. We are basically democratizing this asset class so versatile and everyday investors can invest in these properties and assets. Basically, digitalization and technology is the way forward in every industry, and this is the next big revolution in real estate. Our long-term vision is that we will have properties on our exchange from each and every city in the world, including New York, London, Hong Kong, and investors from across the world. We already have 10,000 registered investors and 500 channel partners on our platform already. But for us, this is just the beginning. Next year is to have an asset base of 500 crore and be present in the top 6 cities in India. We will have investors not only from India, but outside the country as well. Our goal for the next 3 years, however, is to have an AUM of 5,000 crore.
Raycon as a group happens to be our parent company. I think most of the people in the market know about it, but I like to put it across that as hBits and as an organization, we're the most experienced commercial real estate player and fractional ownership player in the country as a platform. So I think to talk about us, in comparison with other peer group, I think it's best to have an experienced player on the shelf. I think we proudly announced to say that. And in terms of our experience, the group is over 35 years of experience in terms of commercial real estate. Let me explain that because it's important. So some of the players are into trading or advisory services, but as a company, we are players who know how to buy land, where to buy land, and development of the same, which is a very tedious and an expertise kind of a business, and then leasing it out and selling it. So we understand the entire paradigm of the entire services. So that essentially will be a additional format for us and experience for us at hBits. To talk about the group, we are backed up by a German group which is in inception since 1834. We got our footprints back in India, Germany, and Dubai. Though we have several square feet developed, but some of the key landmark projects which I want to just share that with you is HNG House at Andheri. We got the D Deutsche Park, which is back in Nahur, which is a prime development for us. Logitech Park, which is again in Andheri. So these are some of the developments which are landmark projects for us. So while we're dealing with all the some of the tenants, we actually have it in our developments. Some of the key ones are Fast Foods, one of the known players in Genico, ATPI, and much more. I think there's a long list of tenants we deal with, and they're satisfied customers for us again. In terms of our business dealings, as I mentioned, as hBits now we have 500 plus partners, but on the Raycon side of business, we deal with all the prime IPCs. We have Knight Frank, we have JLL, we have Colliers, we have CBRE, Cushman. We all have cordial relationship with them. And as a platform hBits, these players will definitely be of benefit for us in the long term. Opinion, the distribution industry over the last 2 decades have evolved considerably. In my time when I was a banker, I've seen industries evolve from a perspective of FDs being a major product, bonds being a major product because they actually came along with a lot of security. Then mutual funds were introduced, other schemes for various fund houses and business houses were introduced, be it a PMS, be it an AIF and other asset classes. But last 5 years, keeping into consideration a lot of factors, the customer wants to have fixed returns, safe returns, where there are no execution risk. Today, you want to get into a developer, a respected developer, who wants to construct a building, there is execution risk. So, after COVID, we are pretty sure about the fact that the customer, the synonym of real estate is all about security and safety. So, moving forward, the customer is looking at a long-term return, as I mentioned, no execution risk, wants to have a capital appreciation, and wants to be assured that the monthly IRRs, which are committed, should come into the bank accounts on time. So from that perspective, we're pretty sure that fractional ownership is the right fitment, the way forward for every investor to be a part of his or her portfolio.
hBits's tech platform is one of the core of our business, and specifically in terms of ease of asset ownership of the investor. So let me walk you through it. Firstly, when an investor discovers the property or he discovers hBits, most likely he would have seen our website. Our website provides complete analysis of the property that allows the investor to make his decision whether to invest or not. Now, what do I mean by complete analysis? We'll have a photo, we'll have a video walkthrough, we'll have a financial model, and these are only a few things. If you log on and go onto our website, you'll be able to see what else we provide. But ultimately, the investor is able to make his decision sitting anywhere, whether this property is for him or not for him, and he'll get a full insight into this property. So that's number one, discovery of the property. Now the investor has decided, okay, this sounds great, I want to invest in the property. Anytime you're making an investment, there are a lot of documentation that needs to be done, a lot of signatures that we require from your end as well. Now we've made it completely easy in terms of, again, you could be sitting anywhere, you don't need to be present physically. You can make your signature digitally in all the documents that need to be signed. So that's number two, you can sign from anywhere. Now you're owning the property, you're making monthly rentals. Well, perfect. You'll have a dashboard in the same way. If you own a stock, you have a dashboard to track how your portfolio is doing, where all your assets are, how your rental has been credited, when has been credited, what updates are there in the property, has there been any changes in that property or in the micro market. We provide all of that on the dashboard. And finally is exit. You can list your share on the platform and exit any point in time. So in that sense, it's very easy for the investor to use our tech platform to invest in property. So having been into commercial real estate for the last 35 years, and not only just commercial real estate, but building buildings from ground up and dealing with the largest multinational tenants, we have a keen eye for what goes into selecting the right asset. So far, we only select assets that are already built and that have all the regulatory approvals in place and are already leased out, again, to multinational tenants. The systematic and data-driven approach in terms of how we select the assets. To touch on a few of them, one is we look very closely at the micro market that we're going to invest in, or the property that we're going to choose. It's very important that in that market there's not an oversupply, as well as that the rentals have historically been moving and we expect it to move northwards in the next few years, because the higher the rental moves, the better the value of your asset. The other thing we look at is the building, and specifically when I'm talking about the building, I mean there's an exhaustive checklist, but touching on a few of them, it's the quality of the finishing, it's the smart building, it's whether it's LEED certified, and we have a comprehensive checklist that we go through when selecting these buildings. After that, the other thing we look at is obviously the tenant that's going to be paying the monthly rentals. It's very important for the tenant to be credit worthy. To check this, we not only look at the balance sheet of the tenant, where we look at how leveraged the tenant is, how profitable the tenant is. We also look at, in the past few months, whether the tenant has been paying their rental in time. This is especially important given COVID. We make sure that the tenant's payment has been on time. After that, the other thing that's very important is the leave and license agreement. Generally, these agreements are 50 to 60 page documents and each and every clause is scrutinized to make sure that the tenant is tied into the property for the length of its contract. While we use our own experience in the industry, we also rely on top experts in the country. We work with the best legal firms, and we also work with the top IPCs like your JLLs and Cushmans of the world. In that sense, we have a very, very systematic, thorough investment process to make sure we select only the best properties.
hBits is a technology-driven platform where we aspire to become the real estate exchange for India and globally. So any investor can log into hbits.co, look at the complete detailing in terms of the product, location-wise, investment amount, however, choose to invest a particular amount, and once he or she has actually chosen the asset and the location, it can reach out to us as a team. We have a dedicated team which can assist in terms of the product detailing and the complete process. Once it's finalized, the investor needs to pay 10% along with the KYC detailing. Once the 10% detailing is cleared, the 10% amount is cleared with us, we will share the further details in terms of legal documents, etc., which are associated with investment for further more information. Just to also update that once the 10% amount is paid, there is a stipulated period where the investor can revoke or plan to cancel the investment as well. We'll be happy to do the needful. Essentially, there is about 90 days of period where we plan to subscribe the entire asset. So within 90 days, for the balance amount needs to be paid for the investment. Once the investment is fully paid up, the asset is registered. From the subsequent month, the rentals will start coming into the account of the investor. An investor can feel free to track the entire investments on the digital platform, seeing what's the status, what is the amount paid up, what's the rentals which are coming, etc. For further information. Also, there is no lock-in for the investment, so the investor can think about investing and exiting any point in time, maybe after a month, after 2 months. For that, he or she needs to list the asset on our platform, and we as a company will assist in exiting the transaction. Overall, as a company, we look at exiting from the complete asset within 4 to 6 years, and which will be beneficial for the client. So there are essentially 4 key pillars and reasons to partner with hBits. One is our experience. As we all know, as a group, we have over 35 years of experience into commercial real estate development. Now, development, when I mean, it's a complete 360-degree view, which is actually look at how you buy the land, look at the transaction, develop it from all perspectives. It's a long period where one has to develop the entire transaction and get a tenant, manage the tenant, and lease it out and exit from that entire transaction. That's one. Secondly, our long-term vision as a company. Now, as I mentioned, we are a long old group in terms of experience. We also have a long vision in terms of fractional ownership, because that's the way forward for us. We plan to acquire over 500 crores of assets in 2021 and about 5,000 crores of assets in the next 5 years. So that's our vision. We are essentially not a startup to create valuation and exit. We are here to stay for sure. In terms of the ability to identify a right transaction, that's very important. Given the relationship with all the IPCs, all the peer group, all the developers, there's a lot of trust of what people carry over the Raycon group and hBits. That will be very helpful for us to actually come up with the right transaction. Also from the perspective that the exit needs to be happening on time. Not only at the entry lucrative price we bring on the transaction, also think what's going to be priced after 5 years. That's very important for us to understand. Obviously, last but not the least, as we are a tech-enabled platform, we plan to get more and more credible transaction on the shelf for the customers to come in and choose from the complete portfolio of transactions. That's very important, because moving forward, the customer might have a crore to invest. He wants to invest into 4 different properties, and not only in Bombay or not only in Delhi maybe. That is where we plan to bring in a larger platter, a more diversified platter for the investor. So these are the 4 essential reasons one definitely should look at hBits as a platform.